This is your host, Stephen Sargeant. Around the Coin podcast, we have Sam Hallene, who's the investment partner at CMT Digital. This is a traditional VC company that got into blockchain extremely early, started dabbling in 2014. Sam joined them late in 2017, pretty much fresh out of school. He talks a lot about the industry, taking chances on projects and initiatives before a category is built around them. He also talks a lot about AI and the way him and his organization approach AI and the possibilities and opportunities with AI and blockchain being connected. We give a little bit of a hint for you entrepreneurs how to better pitch a VC. But you got to stay right to the end to listen to that. And we go into all conversations around regulatory landscape, mass adoption. We even talk about the Chainalysis geography report. This is an episode packed full of anyone that's in payments, tech, crypto, or if you're just an entrepreneur and you want to pitch VCs and you want to hear directly from the VC's mouth, this is the podcast for you. Let me know if you enjoy it. Reach out to me or Sam at SamIam, and we'll talk to you soon. This is your host, Stephen Sargeant. We have a special episode today. We're going to talk a little bit about crypto investing on Around the Coin podcast. We have Sam Hallene from CMT Digital. Sam, you're an investment partner. We're going to go into a little bit of your background, a little bit of what CMT Digital is, but maybe just like set some groundwork. What is an investment partner and how does that differ from any other partner maybe at a venture capitalist organization?
Yeah, I think I have the unique privilege of being able to learn from others all day, every day. I think I'll learn from you a bit on this podcast today here. And, an investment partner, I get to spend my time sourcing and due diligencing investments, specifically in the blockchain and digital asset space, meeting some of the most innovative minds, I think, that are out there that dare to build with this incredible technology and, build a reality that, kind of only they can see. And my favorite part about my job is that I get to get into their mind and see, some of these incredible visions that we've throughout the years seen materialize.
That's amazing. Looking at you, I think the first thing that comes to most people's mind is how young you are. Then I looked at your background. It seems like you jumped right from school into an investment partnership. So there must have been some groundwork there, some soul searching, maybe some finding yourself in Europe. I'm not sure. Tell me a little bit about your work during that time.
Yeah, absolutely. So do you want me to give you the background on CMT Digital, on myself? I mean, they're kind of like one and the same as you mentioned, but let me know.
I want you're in school. I forgot you're University of Michigan, so you're watching probably football or hockey. I think that I follow college, sports a lot. I think those are the two sports University of Michigan's pretty good for. And then you decide to get into blockchain. Tell me what you were doing at school, what you thought you were going to be doing maybe year one, and maybe how that changed. What were some of the whispers for maybe some of the other technical students, or how did blockchain get into your ecosystem?
Yeah, absolutely. Well, you're right on both counts, big football and hockey school. We were also pretty good at basketball. The year before I went to Michigan, we went to the championship, and the year after I left Michigan, we went to the championship. So I missed one of the championship games. But how did I get into blockchain? Yeah, maybe I'll take a step back. So I was an economics and Spanish major. I loved econ because it's more of an intuitive school of thought relative to kind of like hard and fast rules and ratios. And, as I was growing up, I always wanted to be in business, but I always gravitated more towards the philosophy of business and, what is it that makes a moat defensible? What is what philosophy makes founders successful? And what ultimately makes, businesses successful was more interesting to me than any given ratio or covenant or call it like balance sheet metric. Now, all of those are very important. And I, have the pleasure of kind of living in both worlds. But I think a venture skill set, especially at early stages, kind of gravitates towards that. And then I read the Bitcoin white paper in 2015, and I'd always struggled with the fact that money can be printed and has been, seriously printed throughout large timescales. And, when you look at the rise and fall of empires, a hallmark characteristic of, a declining empire is the abuse of money supply. And from that standpoint, Bitcoin was highly interesting. And I really, fell in love with the technology when I read the Ethereum white paper and read about smart contracts and, codified logic, arbitrary logic, started to read about oracles in the early days and what they could do to bring real world data on chain and, the possibility to really reinvent finance as we know it. And as you go further and further down that rabbit hole, you learn that, really a lot of the world's infrastructure, financial infrastructure there's some parts of it that are extremely cutting edge and high tech, but, like our banking infrastructure, there's actually an article published, maybe in 2016 or 17 around the search for COBOL engineers. COBOL is a dead programming language or going to be dead soon, but a lot of the bank infrastructure is written in COBOL. And so they're paying, extremely high salaries to find these types of engineers to maintain these databases, whereas, blockchain doesn't really rack up technical debt, as it were, like one of these information repositories could. So that was kind of my entry into the space.
Quick question before you go on. Did the econ, being an econ major, did it kind of mess with your mind that, all of a sudden money was programmable? Was that like two competing philosophies, or did that actually make more sense where the future of the economy is going to rest on being able to have these digital assets or easier ways to use the financial economy or alternative ways to what the traditional financial ecosystem was?
I think the notion of an accessible financial system, accessible through a smartphone or through a computer, just an average computer, really appealed to me. And as a way to unify, the financial system, now I think that's an ideal. I don't know that will actually happen in practice, and we can get into that. Was pretty compelling to me. I was basically out of college by the time that I started exploring this idea further. My orange pill was the Bitcoin white paper, for sure.
And as you're, getting into CMT, they're a traditional, venture capital firm, traditional investment firm, but then they were just starting to dabble into Bitcoin probably around the same time you were as well. What was like day one there at CMT Digital? Was it like, hey, we have this ball rolling, or hey, we kind of need some bright minds to kind of make sure we're putting in the right guardrails around some of these investments and projects?
Yeah, so the entire culture at CMT is super forward thinking. We learned about Bitcoin in 2013. Actually, our former legal counsel at the time brought us into this space and was exploring the regulatory frameworks that were emerging at the time. So regulation before, technology. Really, we saw the U.S. Marshal Service auctions of the Silk Road coins in the 13 and 14 timeframe. We learned that, a lot of the participants in these auctions were actually trading firms, much like CMT. And, that caught our attention, and we wanted to be at least in the flow of information. So we figured we'd do our homework fast. That was like 2014. And as the firm learned up on the technology, it really was evident to us that this was a way to eliminate counterparty risk, which is, a huge consideration in trading and financial markets, right? You think about it in the context of lending, but also in the context of an exchange. If an exchange is insolvent, or if your prime broker isn't insolvent, then you can make all the paper gains in the world and make the best trades in the world, but to be able to settle those won't be an option to you. And so, from a trading perspective, it just made sense to us that a technology like this should exist. So we really dove in and, started to buy Bitcoin in the 2015-16 timeframe. We actually started a full-time trading desk in the blockchain and digital asset space to capitalize on some of the opportunities that existed in the 16 and 17 era before we started investing on a venture basis. So we'll get into the venture stuff, I presume, in a little bit. I joined in September of 2017, really right as we were starting to see more venture style deal flow. And I joined with the promise that, I would help out on the operations side of things. But the promise was that, if I got all of that work done, then the treat for me, if you will, was that I would be able to analyze all of the interesting deal flow that CMT receives from being in capital markets for 27 years. And so, I learned the guts of, operations at a trading firm, which is surprisingly applicable to the blockchain and digital assets space. And then I got to moonlight as an analyst. My previous internships were in private equity and, in capital markets broadly. And, my recruiting cycle and where I worked before I joined CMT for a short stint was in banking. So, I had a raw skill set in that domain, but of course, nothing can fully prepare you for what you find in the crypto landscape. And I think a lot of the model of thinking is actually kind of like antithetical to, the traditional private equity model of thinking. So, I've really had the opportunity to grow with this asset class. It's a young asset class. I've been, in the space for roughly half the time that Bitcoin has existed. And I feel very fortunate for that.
That's awesome. What was some of those early deals? Because if you're talking 2017, that a lot of these, blockchain projects, they were raising ICOs. They didn't really need your money, right? They had random people saying them Ethereum totaling millions, hundreds of millions of dollars. What was the landscape like? Were there still legitimate projects reaching out to you? Was it more of the infrastructure, the picks and axes type of companies that were reaching out to you? Or like, were you looking for companies that you're like, oh, this seems interesting. They're building on Ethereum. Let's reach out to them. Let's see what they're working on and what their needs are. Talk to me a little bit about that landscape and maybe even what you're seeing now versus then.
Yeah, absolutely. Yeah, I think in 2017, and just by virtue of CMT having a background in trading, most of what we were seeing were, as you described, the picks and shovels of the financial infrastructure. So custody, exchanges, brokerages, lending, borrowing. The use case for digital assets that had found clear product market fit by 27 was trading and speculation. And so there was a lot of the future of this asset class hinged on creating robust kind of capital market infrastructure. At least that's what we thought at the time. And that was really the flavor of our initial investments into the space. So think things like Coinbase, ErisX, BitGo, FalconX, Silvergate Bank, things like that. As you get deeper into the space, or as we got deeper into the space, the realization was really that this technology is an everything technology, much like AI. We really profoundly believe that database and computational paradigm that blockchain technology brings with it will affect nearly every asset class and industry. And with the luxury of investing on a long time frame, that gives you a lot of creative freedom to think about, okay, what comes after infrastructure? And for us, some of the early machinations in Fund One was really blockchain meets gaming.
Correct.
And so the investments that we made out of our first fund into the gaming space were Horizon Blockchain Games, which is a Toronto-based.
I'm in Canada. I know them. I'm Toronto-based. So.
They're absolutely wonderful, and they just announced a large partnership today with Immutable. And then we also invested in Dapper Labs.
You gotta love Dapper Labs. What's it called? I can't even remember what it is. What do you
NBA
call it?
Top Shots.
Yeah, Top Shots. I know. I spent quite a bit of money. I think I still have an unopened pack that I'm looking to go big on. I'm going long on that, not opening it up for maybe a couple of decades, hopefully.
Nice. But yeah, I mean, like the use case of gaming is something that we're still extremely excited about. I think broadly where we're at right now, there's been just so much change over the last 6-7 years. And we're at a place where in 2017, there were, there's a, always you always invest on a probabilistic basis, with different weights to different types of outcomes. And back then, the weighting that Bitcoin would not exist in 5 years was certainly not zero. And it was something probably closer to, 50% maybe. But we knew that if it did, it would, that it would potentially radically transform, our capital markets and database infrastructure.
I think that's an
Today,
interesting point, right? Looking back, it's easy to connect the dots, especially with the price it's at today. But at the time, it was like, yeah, you're risking all of your investments, and no matter who the jockey is, there might not be a racetrack for the jockey or the horse to run on. So it doesn't matter how fast they run. There's no prize to be won, which is interesting. You don't hear too many people talking about like, yeah, we're investing in not only a company, not only a founder, but hoping that the industry will still be there by the time our profits are realized. Talk to me a little bit. I just came back from a huge business summit in Las Vegas, and they're all talking about EBITDA and numbers and CAC and LTV. But you're early stage with a lot of these companies where I'm not even sure if they have revenue. It might even just be an idea. What are you weighing some of your decisions on? Is it where they are in the market, the total, addressable market, the passion in the founder, right to run through walls no matter the obstacle? What are you weighing it on if you're not seeing a clear picture about revenue?
Yeah, I've heard it stated that venture investing or early stage investing is a combination of underwriting team, traction, TAM, technology. In the blockchain space, probably regulatory is a big consideration to throw in there as well. When you're investing at the earliest stages, it's basically all team and TAM. There could be thoughts around what a technological moat would look like, but it's a very big chasm to cross between when you ship a product versus what you ideate on what it will look like when you build it. You always encounter challenges in the process of shipping technology or a product. And then it's an even bigger chasm to cross to get somebody to pay for what you're building. And so I think this whole business is still very much a human business. It's underwriting founders with passions, making sure that your incentives are aligned, and especially in the venture business where you're really looking for large outcomes. So you're looking for founders that are audacious enough to not settle for a outcome that perhaps is life-changing to most everyone, including myself. You're looking for them to not settle until they've completely disrupted an industry or built an everlasting type of product. And so those founders are very much ideologically driven, and underwriting at the earliest stages is searching for that. We also like to invest in outcomes that have, we call it like a venture style skew, but it's if a few assumptions go right, then this business is in, an almost monopolistic state at the end state. And it becomes very hard to compete, whether that is a compounding data moat, which you see a lot in the AI business, although it's present in the blockchain business. I think a lot of the moats that you see in blockchain are mostly around, network effects, which, is a very, well-studied type of moat. But those are the things that we look for. TAM is interesting because I think the best companies in the world actually invent new markets. And so those are really fun to reason about. I guess what I can say is that we have a meeting every week with our entire team where we write memos and bring, really, really wacky concepts to the table. We have folks from all different types of disciplines. We have traditional venture capital. We have more of a trading type disposition from the founders of CMT. We have private equity backgrounds. We have a few folks, including myself, that are more on the crypto native side of things. And, when you step into that meeting, you leave you try to leave all emotion at the door and try to reason through some of these concepts that, may have never been really reasoned through to a large degree. And, I think what we've developed at the IC over the last 7 years is really a trust, a belief in each other, and a respect that allows us to very soberly, debate these ideas. But I couldn't do anything, without my teammates. It's really an incredible group. And those are the conversations where, we come to consensus or not. And it's more individually driven on, I just have such an extreme belief in this founder that, I want to take a swing here. And that those oftentimes have good outcomes as well.
Can you remember anything that you didn't take a swing on? You were like half and half the team's like, yeah, let's go for it. The other half's like, hey, we've taken a lot of chances this quarter. Let's maybe wait for another round or see what happens. And now you've seen the company kind of blow up. Is there anything that you're like, oh, that looked really obvious at the time, but we were still meant half and half. And now that they fulfilled what we thought they were going to.
Yeah, absolutely. I think there are certainly, I'm pretty sure like Bessemer has their wall of shame, or, like their anti, like, I forget what they call it, wall of investments. And every VC firm has one. We have those as well. We don't dwell on and punish ourselves for those. What we do is analyze them deeply and think, where in the analysis did we potentially err? And, the venture industry is one of, the sins that you commit in this industry. I've heard it said are sins of omission instead of commission, meaning they're the deals that you didn't invest in that you wish you would have, instead of the deals that you invested into and wish you didn't. So it's really, recalibrating to just fine tune or hone in your pattern recognition when you miss one. But yeah, we've missed a few.
You have to be in this game, right? Like anyone that got rich in crypto has been wrecked on more than one project or got eaten up in a couple bull markets. It's part of playing the game. You can't get rich without losing some money in this game, I'm assuming. I actually want to talk to you. You said something interesting on CNBC that, your company likes to invest in, projects before a category is named. Talk to me a little bit about maybe a category that was named after, or some of the projects that you thought like, hey, not yet a category. I think Dapper Labs would be an interesting one. There wasn't really a category. NFTs were a thing, but like, that kind of cross section, the culture and sports hadn't been emerged yet at that point, in my belief. Is there any other categories now that you're seeing that you're like, hey, it's not yet a category, but I see a couple players that they could be onto something. I know soulbound tokens that Metallica came up with was gaining a little bit of traction before the last bear market, but we haven't heard much about it since.
Yeah, I think so. Like to get connected to founders through, our founder network. We find that is oftentimes the best source of deal referral, because, they're thinking about ideas that are, not just incremental, but 10 steps ahead of the curve. And so oftentimes our best, chats are with our founders, actually on the deal flow side of things. What I think one of the areas that I'm most excited about is this DeFi 2.0 category, if you'll call it that. I think where from a timing standpoint, it feels as promising as ever right now that traditional finance is going to meld with the blockchain and digital asset space. And you see major players really stepping up, whether it's BlackRock and even Larry Fink saying that he believes all financial assets will be tokenized, Stripe acquiring Bridge, Franklin Templeton launching digital money market funds. The list goes on. And I think that there are certain elements of the tech stack that just must be decentralized. I think custody is so these assets are going to live on blockchains, but perhaps the order book on which they trade, is not fully decentralized. Maybe it is at the end state, but if you're looking for latency that the top trading firms want. There are just physical laws of blockchains that, almost preclude you from getting to these levels of latency. So really DeFi 2.0 is combining the best elements of centralized and decentralized finance. I think a project that really embodies this is Ethena. Ethena has created a stable unit of value pegged to $1 by going long Ethereum and Bitcoin and short the representative perpetual futures on both centralized and decentralized exchanges. And so they've created this, they call it the internet bond. And, it relies on both centralized and decentralized infrastructure, but where it matters, the counterparty risk is decentralized. And I think that this is uniquely enabled by blockchain technology. I don't think that this type of product could have existed, without, without Ethereum and Bitcoin. And I think that it'll be interesting to see it infiltrate into kind of mainstream finance.
As we see things like the Bitcoin prices going up, is it harder for you guys to get on cap tables? I know, when the market's up, companies get a lot more pickier than they did, last year or maybe even the year before, and they try to use that leverage. What is the scenario like when the price is up? Because you guys have been in the market for a couple of bear markets and a couple of bull markets by this time. What do you see changing? What's the biggest trend you see changing?
Yeah, I mean, I think there are some pretty profound changes in market structure where the incremental dollar, the marginal dollar, is flowing into the ETF complexes as opposed to necessarily direct inflows into exchanges. I also think this technology is performant enough now that the centralized trading experience is very much rivaled by the decentralized trading experience, i.e., meme coins on Solana, can be accessed with, almost the same ease as accessing a Coinbase account or Binance account, albeit a lot of the dollars flow through those accounts originally to onboard. And so I think that, on the one hand, we will see kind of a necessary marriage of what is traditional finance and this new emergent decentralized finance. But on the other end, we also see that, perhaps the actual rails on which all of this will ride are decentralized rails. So I think that's highly interesting. To answer your first question, I think that we try to provide a unique value proposition to our portfolio companies, and we try to necessarily swim in the waters that are not as crowded. We position ourselves as a global firm with a real boots on the ground presence that will meet up with you in person or fly to whatever big meeting that you're trying to close and you think it'd be helpful for us to be at. At the same time, we leverage, really scalable assets, which are our expertise in trading and security and other assets to help our portfolio companies navigate those types of decisions. We are deeply embedded in the regulatory conversations. We're members of the Blockchain Association. We actively contribute to other working groups in the space and try to be ahead of the kind of the coin there in terms of what rulemaking is coming down the pipeline, specifically in the US, but abroad as well. And we really try to be a partner to our entrepreneurs such that the first name that comes to mind when they see a deal or an interesting opportunity is CMT. And we feel really fortunate over the last 7 years that we've been operating to have developed extremely deep, robust, strong partnerships with our founders. And so, I think the space may get more competitive, or the price of Bitcoin and Ethereum may rise, but we're trying to bring light to the corners perhaps that people aren't at, and that, and oftentimes it's a signal to us when others tell us like, oh, I wouldn't, pay attention to that space, or, oh, I've never heard of that. That's kind of like music to our ears.
How do you balance that though? Because I know you have a long-term approach, but there is like hype cycles, NFTs, metaverse, security token offerings. STOs was a big deal a few years ago. How do you manage long-term with like, hey, we have to take a chance at some of these things that have maybe, that are hype right now, but we saw how quickly the metaverse got removed from people's LinkedIn profiles. Crypto in general got removed from people's LinkedIn profiles. How do you balance like long-term sustainability, but also, how taking a chance on the flyer that something is hot, it's new, and others aren't willing to, invest in it?
There's this asset and sometimes downfall that the blockchain and digital asset space possesses, which is success can happen very fast. Liquidity can happen fast as well. When we underwrite our investments, we're underwriting fundamental business value accrual. We underwrite them for, in most cases, a 5+ year holding period. More and more entrepreneurs are exploring the benefits of tokens because they have theoretically kind of unlimited, value accrual mechanisms, and a lot that I think we haven't explored yet, and a lot that is really interesting that is, active and working today. And they have also at the same time the ability to have like viral incentive loops, and it allows for quick success, as I had mentioned earlier. And so I think, the blockchain venture is probably it's not the same as traditional venture from, a requisite skill set standpoint, where I think you also need to be able to respond on the fly with changes in the environment and very actively monitor the positions, as opposed to, call it like a board meeting every quarter. So that's something that we've really tried to orient our minds around and be opportunistic when we can be, all while understanding that the power law is what's going to drive the returns for our portfolios, and trusting in that and seeing that played out, through cycles and years past.
That actually leads me into my next question, because a lot of people have already said like AI has already gone through that kind of VC hype cycle already, and a lot of them are saying it's, the values are over allocated. They want to stay away from it. They're going to let it tone down a little bit. Where you've taken the approach where like, hey, they're just not seeing what we're seeing. What are you seeing in AI right now that still makes it an investable category for your organization?
Yeah, well, I mean, I think like empirically, the dollars that have been spent in AI are massive. And there is, as we're building this, corpus of infrastructure, a need to spend that. And I think that this will be persistent. I think, I think it's very true that there is an AI hype cycle. I would say the intersection of blockchain meets AI is interesting and fascinating to us. And I think, as we go forward into our next fund here, we will see meaningful dollars allocated to this space. Where I think the intersection, really, comes to life is with on-chain agents, or agents that pay each other with digital dollars or blockchain-based dollars or other assets. I think we'll see this probably take off first, and we're already seeing it in these automated Twitter personalities and trading bots. But I think quickly we'll get to a world where you just have an AI sidekick that, you do life with, like we all do life with our iPhones. And in that world, I think that blockchain-based assets, clearly non-deterministic, logic will help be the guardrails, or sorry, deterministic logic will help be the guardrails for, this non-determinist technology. I think, the areas of like benchmarking and evaluation and making sure that what we're being told is true, especially in high value scenarios, can be governed by a decentralized network. I think we've got a ways to go on the decentralized compute in the decentralized compute space, but I do think that at the end state, at the limit, is going to be like a staple for our like a passive earning stream. And what I mean by that is right now it's pretty difficult to provide, high quality computation or computational power that would meet the requirements of a large language model, or a company that would be training a large language model, just because, you need high uptime, you need low latency, you need homogeny of devices. And like the decentralized market, it's hard to provide that right now. But we do see things like decentralized storage on Arweave or Filecoin, working. And so that there is, incrementality towards that ultimate end state. And so I think, it's just a matter of time before we figure that out.
When Filecoin's protecting the world's most, you need the world's most accurate data, the world's most treasured information. You need someplace, especially now with AI, you're going to need someplace where you can guarantee that the information that you're receiving hasn't been modified, adjusted. I think that's what a lot of people are talking about. In 5 years, you won't be able to believe any videos that you see online. And, there's some huge infrastructure plays there that where blockchain, as you said, will be the governance kind of layer for a lot of this. I'm curious to you, though, because you mentioned moats a couple of times. I have to imagine it's hard to build a moat when the technology is just moving so fast in AI. What are your thoughts? How do you judge what could be a winner, what might, even if they have a total addressable market, somewhere could leverage a lot of OSINT or open source technology and AI to create, something that speeds passive. We've seen that a lot right out the gate with a lot of these AI generated captions tools. Some of them look like early winners, and then you have these. It almost feels like Snapchat when they released the stories, and Instagram copied them and completely wiped out most of their market base. What are your thoughts on that?
Yeah, I think data is the moat for a lot of these plays. And if you can't, and that's a really interesting kind of self-reinforcing type of moat. If you can have data funnels that are clean and persistent, and you can produce an output that encourages more of that data to be provided, then that's a real moat in my mind. I think that the productivity gains that we're going to see from artificial intelligence are absolutely mind-blowing. I think I've heard it stated from people that I trust that the cost of tokens is declining at twice the speed of Moore's law. And so, which is almost an exponential curve that's really almost unfathomable when it comes to real use cases of this technology. So, and even in terms of building, these foundation models themselves and these chips themselves. And so I think that we're going to see I think data is ultimately the moat, and then like trust and truth is a moat as well, whether it be the, like, as you had mentioned with deep fakes, having a blockchain authenticated, signature for content that you put out, or having trust that, data hasn't been manipulated, and doing that through, like zk-TLS pipelines, if you will. That's something that we're actively exploring. Or just, relying on blockchain, like going back to the core, like function of blockchains, which is like, they're just truth machines. They, on a 10-minute basis or a 14-second basis or a sub 1 second basis, pump out what the entire network believes is truth. And I think that's going to be profoundly important in terms of a moat going forward.
Talk to me a little bit about regulation. You mentioned it earlier, especially in the US, regulatory clarity, not that great. Trump promises to make it a little bit more transparent and focus a lot more on it. But, you're getting into regions like the EU with MiCA, Hong Kong, Singapore, Dubai have its own blockchain regulations, but also in the realm of AI, regulators around the world are trying to create some guardrails for AI. How much does regulatory infrastructure weigh in when you're making some of these decisions? Are you keeping an eye on whether some of the legislators in progress or going through the Senates or the Congresses?
Yeah, I mean, I think a truism of technology is just that it always leads regulation.
Right.
I think a fallacy that many make is that, or a mistake that many make is that regulation will not ultimately catch up to the technology. We believe that this will happen in the United States and in other regions of the world. For the last several years, the United States had been losing blockchain talent to the rest of the world, to key pockets of innovation globally in the blockchain arena. I think with this election, there's strong signaling that this will be reversed. And I think it happened just a few minutes before we hopped on this podcast, but something like 18 states are suing the SEC for broad overreach of their goals. Perhaps I didn't get a chance to read the entire complaint, but we are seeing now a hard push for change and for regulatory clarity. I'm the most excited I've been ever to invest in the blockchain and digital assets opportunity. And one of the largest reasons for that is the regulatory clarity that I think that we're going to gain in the United States. And that's what we were asking for. That's what we've been asking for the last, really since the inception of this technology, since CMT got into the space, is regulatory clarity. We want rules of the road, but we want, I think, rules that are coherent and ideally that use blockchain technology to regulate, blockchain technology, as opposed to applying old technology and old standards to a technology that really couldn't have even been reasoned about, when the rule books were made.
I think you make a good point there. Is there any trends that you're picking up on, whether it's deal flow coming in, any jurisdictions standing out? We know LASM and APAC regions have been, flooding in with whether it's meme coin culture, whether it's, beating hyperinflation. What are your thoughts? Any trends that you're seeing come across your desk? You're like, oh, like this region's really picking up, or this region's seeing a lot of startup innovators. Anything that you can share with the audience?
Yeah, it's always interesting to see the Chainalysis reports come out. Chainalysis recently released their 2024 crypto adoption index, and the countries that are adopting at the fastest rate, I think this year India was number one, and Argentina was in the top 5. I think it's a signaling. I wouldn't go as far as to say validation that this technology is accessible. It's accessible to folks that may not have a bank account or are at least, call it underbanked, and whereby they have access to some level of financial services, but it's really difficult for them to sleep well at night, knowing where their money is stored, or if they feel they need to spend it or store it in something else because they can't store it in a traditional bank in context like you and I would think about. So that's really exciting. I wouldn't say that's a new trend, but I think that, at this point, Bitcoin has hit product market fit. And I mean that in a few ways. It's now being talked about on a government level, and there are talks of a strategic Bitcoin reserve. I was reading that Polymarket has a 30% odds, a 30% a probability that the U.S. develops a strategic Bitcoin reserve, I think in the year 2025. So, that's in the conversation. I wonder where those odds would have been at even 12 months ago. Our portfolio company founder, Jack Mallers, likes to say that Bitcoin's the most recognizable brand in the world. I believe that's true. And so really for the first time, Bitcoin is becoming a globally consensus technology from the standpoint that people are starting to trust it. They're starting to associate positively with it. It's starting to become normal and boring to talk about in social circles.
Yeah, if you're talking about Bitcoin, it's like, oh, who's the grandpa in the room, right? Like now it's like, if you're not dealing on some Solana meme coins that make no sense, like you're not cool. And it's funny that you bring that up because that's exactly where it's gone from. It's being talked about in a positive light from people that aren't speculating, like are, by people that are, professionally speculating, for lack of a better word. And it's not being talked about with Prime as much. Chainalysis, obviously, we're big fans here, clients of mine, but those reports really help you kind of see like there's a lot going on, especially because that report's on the grassroots level.
Right.
What's really happening in these organizations? You have a portfolio company, you probably don't know all your portfolio companies, but Busha is one that I saw there who also was on a Chainalysis podcast. And, I look at a region like Nigeria where you can't just go into your bank and get US dollar funds. It might take weeks, if not months, if you are able to get it. And you start thinking, well, how can they play international vendors? How can they operate small businesses? What are your thoughts about more of these countries needing to adopt that crypto as they're kind of almost like fiat currency? Because the fiat currency itself is being devalued at such a rapid rate that they need to get their funds in stablecoin to avoid completely annihilation of the funds they're holding.
Yeah, Busha is an amazing company. The team is fantastic. We've worked with them for close to 3 years now, and they're the first Nigerian exchange or brokerage company to be regulated by the Nigerian SEC, which is a huge accomplishment because the previous regime was highly anti-crypto because it took away one of their levers to control capital outflows. And so the Naira was rapidly devaluing, and a large reason for that was people were saving in stable coins, which I think is profound, that everyday Nigerians are going to money tellers and choosing to save in stable coins. So I think that this is like a ground up movement. And I think that in Nigeria, Busha being regulated, being a trusted player is going to do phenomenally well. And, they're starting to see more business use case, starting to see, more everyday commerce. And that's incredible to me that their clients are choosing to use digital dollars to transact as opposed to the other options that are available to them, be it card or cash or traditional rails. So it's something that we in our probabilistic distribution of outcomes, we definitely had on the bingo card, but to see it happen this fast, it's pretty amazing.
And we see the importance about being registered. There's a lot of exchanges that have come into the region that have been met with, a lot of controversy, a lot of when you're not registering with these authorities and you're getting their customers. It's a huge issue, I think, in a lot of these industries, especially blockchain. To wrap up, though, you're raising your fourth fund. Is that sort of like how is a VC raising funds sort of like how a project would try to raise funds from a VC? Is it a very similar process? Is it kind of ironic in some way where now you have to raise funds the same way the companies are trying to raise funds from you?
It's a fun experience to be able to raise a fund, to get to talk about what I do every day on a day-to-day basis. This is our fourth fund. We have wonderful investors that have put us in this new and emerging and evolving space. We're an SEC registered investment advisor, so we're in extremely, regulated, and we strive as hard as we can to provide the highest quality of service. So it's fun to be able to tell people our story and to paint a picture of where this technology goes. And every time we go out to raise, the crypto fluency upticks, materially. And so, we have really smart investors that send us deal flow and like to spar kind of intellectually on a lot of the ideas that we're working with. And so, it's a great honor to be able to even have those relationships. So it's a lot of fun. And yeah, it's, fortunately we have folks that want to invest with us, and being on the fourth vintage, they've kind of come to know what to expect from a process standpoint, and they know us as an organization. And so, I have nothing but the utmost respect for entrepreneurs that are raising funds, especially raising for the first time, because it's no easy task to, really put yourself out there and kind of dictate what you're all about, and, why you're raising and why you think what you're doing is going to be impactful. And so I commend anybody that does it. And perhaps this opportunity to raise our fourth fund allows me to better empathize with the founders that raise capital. But I think that they're doing the hardest job in the world, especially if they're solo founders. We have 20 people plus here at CMT Digital that help and support in incredible ways. And if you're just a founder or a founding team, it's like Elon Musk says, chewing glass and staring into the abyss. So, nothing but infinite respect for the founders that we come into contact with. And, that's why we wake up every morning excited to try to support and try to maybe take a little bit of that burden off, but it's a true pleasure.
Awesome. We're out of time, but I just want to is there any quick tips for founders that you see a little something that they're doing that you're like, oh, great presentation, great numbers for as much as they could have. But you're like, oh, if I could just tweak this one thing, I think they would be at least increase their opportunity for success. Is there one thing that you see people do that's like a constant trend? You're like, oh, I don't know, like maybe it's inflating numbers, or, not getting the exact TAM right, or over embellishing on the TAM. Anything that you can like pick out one quick tip to leave a founder with?
Yeah, I mean, I think you need to get the point across in like the first two slides, or else interest can start to drop off. I think that it depends on the context in which you're presenting to a potential investor, but you really need to be fast at getting out the message on why your project is differentiated and going to be profoundly impactful. A lot of times, and that's an intellectual exercise in and of itself, in articulating that and really distilling down and knowing and understanding where you differentiate. So, really put thought into that. And if you do, you'll also refine your idea further. And if you can clearly articulate where you have an edge and you're truly passionate about what you're doing, then you'll be able to raise funds and attack the idea with kind of full vigor.
I love that. First two slides, very important. I don't think I've heard that yet, where people are they're probably long-winded into getting the point. They like to build up the hype a little bit. They watch a little too much Shark Tank. They might be building it up a little. Sam, where can people find you? Where's the best place to get in touch with you? LinkedIn, Twitter, where can people get in touch with you?
Yeah, I'm at Sam I am on Twitter. I'm on LinkedIn, Sam Hallene. But I'm going back and forth on Twitter and Telegram. I'm Sam_I am on Telegram as well. So it's been a real pleasure. I really appreciate you having me on and asking great questions and just having a great conversation, and appreciate the opportunity.
This has been fun. It's really interesting to get deep into the minds of VCs, especially one that like really you were born into this. It seems like straight out of school. So it's awesome. Thanks so much, Sam.
Yeah, thank you. Thanks for your time.